Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're just doing another portfolio update slash breakdown. Just one of those videos where I just kind of keep you all updated and show you all what my portfolio is looking like. I know that not really much has changed since the last two updates I've done, but still, it's just kind of cool to do because we get to talk about the stock market and the future and what I think is going to happen in the next upcoming weeks or so. So if you enjoy this type of content where I just give you all a casual transparency update with my portfolio, then please make sure to smash that like button, drop a like on the video. Definitely helps me out and I appreciate it. But as you can see, today was one of those days where it's a red day, but I'm not really sad about it. I'm not really discouraged about it. I feel like today was just one of those days where it wouldn't feel normal if we didn't have a day like this. If it was just 5 days straight of nothing but green days, it would start to feel a little bit strange because at least you would expect like one red day in a week. And I feel like if we didn't get this red day today, then there would be some people that would be being super cautious with this upcoming Monday. And some people may have even panic sold if we got 5 days straight of green days, because that's usually when you're on a run like that, that's usually when a lot of people are just like, okay, I'm just going to take my money and run. I'm in a good position right now. Nothing ever wrong with cashing out with any percentage of gains. So there's a lot of people out there that I think if we didn't have this red day today, they might have thought, okay, this is just too much. My portfolio is up way more than I expected, so I'm just going to cash out and play it safe and wait a few months. So with a day like today, I feel like, with it only being down 0.24%, at least my portfolio right now, in total it's down 0.53%. But with a day like today, I'd much rather prefer a day like this and just to even things out rather than just have 5 days straight of green days where everybody's making money and then a bunch of people just decide to sell off on Monday. So I don't have a problem with today whatsoever, and that's one of the huge reasons why a day like this doesn't bother me. Even like normal red days regardless, they don't bother me because I know it's just noise. It's like a temporary road bump, and I have like the long-term vision, so the day-to-day movements don't really matter. It's what the general trend is doing in the long term. And man, that's so satisfying. For a second there, Tesla was at like $9.99, just perfectly even. But yeah, like I said, a day like this is definitely needed for the stock market because it kind of just sets things not even, but it balances them out a little bit more than what it was at, because it was just at like a straight up bull market. If you look at the past week, just nothing but growth until today. Plus 6.75% this week. That's about $5,500. That's absolutely crazy to think that I earned around that much money just this week alone. That's really crazy to think about. When you think about how long does it take to earn $5,500 just within a year with your normal job? Like, I've made more in terms of just unrealized gains on investments this week than I've actually earned on my actual job this month. $5,500 is probably about around like 2 months worth of work for me. So that is pretty crazy to think about. And like I said, if we didn't have a day like today, I mean, it honestly wasn't even a bad day at all. It was only minus 0.50%. I mean, yeah, that's $460, but when you look at the percentage, it's not really that much. So I definitely feel like we needed one of these days. And I'm kind of glad that with it being red, it's not like we lost every single bit of the progress we've had so far. It's not like as soon as it hit June 19th, we dropped down to this right here and we're back where we were on the 15th. So I'm definitely happy with this week. And if we look at the past month, we'll see this previous peak that we're at. So as we know, there was a dip right here. And with the point that we're at right now, we're kind of getting near where we were like on June 10th. I can't remember if that was like last Thursday or last Friday. It was one big day where it was just absolutely insane growth, and I couldn't believe it. And that's what led to this dip right here, because a lot of people realized, and I wanted to emphasize that with this week as well, with the 4 green days in a row. But a lot of people realized this was just up way too much. I mean, look at that jump. It goes from plus 6.68% to plus 10.56%. It goes to like 5,000 to 8,000. So as it hit its peak up here on June 10th, I think a lot of people sold out, and then with that upcoming Monday, we had that downturn. So I just want to emphasize that sometimes that can happen when the stock market moves up too fast. People start getting cautious and scared, and some people start panic selling. Whereas you have consistent growth like this that is still significant growth, but it's kind of like slow growth over every single day where it's less noticeable than it just simply spiking up and people realizing that it's way too high. Whereas when it's growing slowly like this, it kind of like sneaks up on the people that would normally panic sell if it skyrocketed. So it seems a little bit more natural, I think. So even the stock movements can have an effect and influence the moves that people make in the market. Like I said, if this would have just been a pure spike up like we saw right here, we may have seen another sell-off today or Monday, but I think where it's a little bit more consistent and it's just that slow growth, not really slow growth though, to be honest. It's 6.61% in 1 week. That's over half a year's worth of growth in 1 week if you're investing in an ETF like VOO, which grows about 10% per year. But yeah, I just wanted to emphasize that sometimes, like, even just the growth itself, like if it grows too fast, some people get cautious and want to panic sell. Whereas when it grows like this, I think people are more influenced to just hold in the market because it's more consistent growth. However, keep in mind though that a lot of people are still being cautious right now with the Fed buying corporate bonds. And the next move, a lot of people are thinking that the next move is for the Fed to buy individual stocks. We don't know if that will actually happen just yet though. But if they do that, that's where we know the Fed is really exhausting every sort of resource they can to prop up this stock market. But that is one huge issue right now that people are thinking of, because if you look at like the history of the Fed and their resources that they're using, I'll actually go ahead and show you. So let's go ahead and look at the Federal Reserve Board website, and it shows like the recent movements they've made in terms of like total assets and millions of dollars. So basically they're buying more corporate bonds, they're spending more money and pretty much printing more money, creating money out of thin air. But as you can see right here was the '08 crash. As we know, the Fed had to print a ton of money right in that area just to get things back up. It took a while for this to recover, but they did print a lot of money within that time. And assets have just kept on continuing to increase. And so far, like if you look at March 23rd, starting on March 2nd, March 2nd. So if you look at March 2nd and then on, that's when the money really starts being printed. That's when you know, those numbers start being put into the spreadsheet out of thin air. And it's actually like 3 times the amount in '08. So I have to admit, in terms of just like a comparison to the 2008 stock market crash, considering that stock market crash was very significant and we had a V-shaped recovery on the most recent one, they've printed a lot of money for this V-shaped recovery to happen. And it looks like there's a little downtick of it right there at the peak at like June 1st or so. I don't know about the rest just yet, but it does look like it's going down a little bit. So that's something to keep in mind as well. Assets have increased for the Fed, which they've been printing a lot of money. And we know that the Fed can really just print as much money as they need to ensure that the markets are looking good. But I don't really know if that will actually happen. There's also the argument from many people that they should just let what happens. And I think that's a decent point, because it does make you think, like, what's the point of the stock market and stuff if they're just going to get bailed out? Which obviously, ideally, I would, you know, right now I would like to get bailed out just to prevent a crash. But you got to really think about the long-term effects of the stock market getting bailed out and the Fed putting a lot of money into like corporate bonds and stocks and stuff like that. So definitely it's good temporarily for us investors, and it keeps the stock market from going into like a recession. But I think in the long term, there's still going to be some negative effects in terms of like a bubble. And a lot of that is simply going to be caused from the fact that the Fed just kept printing money and printing money. So there most likely will be some long-term effects from this most recent situation where we've had so many assets added with the Fed. But like I said, the Fed pumping money into the market is good for us current investors temporarily, but it could lead to a bigger problem down the road that you do have to think about. Like, as long-term investors, we also have to think long-term about the effects of the Fed keeping the market propped up and sort of like putting us in a bubble in a time where you would never really expect to see a bubble. Like, this is almost like a recession. It's not officially a recession or anything, but it kind of feels like it. Like 30% of people haven't paid rent this past month, a huge amount of people on unemployment, and there's just many other factors that just all contribute to what would normally be like a downturn in the economy and bad stock market days, like a huge stock market crash. But the stock market is surging and it's a V-shaped recovery. It literally is a V-shaped recovery, and we've already gone past that now. So this is definitely huge. It's definitely something to think of. It does kind of feel like we are in a bubble right now, but as you all know, I'm in it for the long term. So even if we are in a bubble, if you look at the charts and stuff, people have made charts before, and I've seen charts where people have hypothetically just said, okay, this is the argument. This person invested at the peak right before every single crash in history, and they still made this certain amount of money. And it was actually really interesting because it was showing that even if they invested like the day before every single crash over the last 40 years or so, they would still have like a lot of money in returns. So that's my logic with this. Even if we are in a bubble, I'm still going to be dollar cost averaging on some of the stocks that I want. Like I always say, I think Microsoft is still a really good price at $195. It's still like $2 under fair value. I think think Tesla is still a good deal for around 1,000. Yes, it's a little bit of a premium right now, but I think in retrospect, in a few years, I'm going to look at 1,000 and think, man, I really wish I would have bought more at that price. Apple is obviously a little bit high, but I do think it deserves around this price tag because I think it does offer a lot as a company. Anyways, I'll just go ahead and show you all the percentages and just show you what the losses are looking like for today. We don't have any gains for today, which that's okay. Like I said, this is just one of those days that was needed to balance out the stock market, in my opinion. So as you can see for Microsoft, we are down 0.89%, which is about minus $341. And in total, we're still up over 10% at plus 13.48%, which is about $4,500 in gains. Very happy with that so far. And then next up, we have Tesla stock. This is actually not down too much today. It was down a lot more. So it's only down 0.41% for today. And we've only lost about $141. And in total, we're at plus 19.21% or plus $5,478. So really solid for Tesla so far as well. And then for Apple stock, we are down 1.06% for today, which is about minus $157. And then in total, we're at plus 21.70% or plus $2,600. So Apple is actually the best performer in terms of just percentage so far for me at plus 22.30% so far. And I think it's actually performed better than every other stock that I own right now. So surprisingly, Apple is the big winner so far. So that's pretty interesting. But anyways, I just wanted to share this little transparency update with you all, the portfolio update. I hope you all enjoyed this video. If you did, please make sure to smash that like button. It really does help me out. And also feel free to sign up to Robinhood and Webull with my referral link in the description. If you sign up with those links, then we'll both get some free stocks. Here's just one example of a free stock that I'm holding right now. I'm actually waiting for it to recover a little bit up to this general trend line, so I could probably get like $8 or $9 off of this stock once I finally sell. So that's some nice passive income if you would like to sign up and check out these brokerage apps. But anyways, I hope you all enjoyed this video, and I hope you have a fantastic rest of your week. Stay safe out there.